Hey everyone, how you doing? What's going on? This is QuickBooks for real estate investors, and this is our continuing video series. This is part 7. Today I'm going to go over adding depreciation accounts. If you remember, in part 5 and 6 we added some fixed asset accounts for land and buildings, and now we've got to create our matching depreciation accounts for buildings. If you remember, we do not depreciate land, so there is no depreciation account for land, but there is a depreciation account for buildings. For those of you who are unaware, depreciation is basically the cost of something over time, and we depreciate big purchases. So a building is a big purchase for most people. And that cost is expensed over time. The best way to think of it, what helps me think of it, is that a building doesn't last forever. It has a finite life to it, and all we're doing is taking away a little bit of the value of that building over time. So as it gets used up. You can only use a set of stairs so many times before that set of stairs is used up. And in buildings, according to the IRS, residential buildings, it's 27.5 years. For commercial buildings, I think it's 39. I don't do much with commercial buildings, but anyway, so think of it like you can't have something forever. It gets used up. So we've got to make that entry in our books as we use it up, and generally we use it up on a yearly basis. We just make one entry. To make that entry, we need depreciation accounts, and we've got to create those. So let's do that today. I'm here in my fictitious company. I'm going to hit Control A to get to Chart of Accounts, and then I'm going to maximize so I can see everything. And first thing I'll look at, if you're following along and if you've set this company up the same way I have, or if you've set up a company file before and you haven't touched depreciation, you will have this account here called Accumulated Depreciation, and you'll notice this is a fixed asset. And don't let that throw you off quite yet. I'll explain what that means. And also we've got depreciation expense, and this is an expense account. So two different types of accounts for the same thing, depreciation. And this account, accumulated depreciation, just like the name suggests, tracks the total amount of depreciation ever against a certain piece of property, against a fixed asset. Where this depreciation account, depreciation expense, only tracks depreciation in a given time period. For most businesses, that means in a year. It usually follows with your fiscal year. So if you have a fiscal year or a calendar year from January through December, like most people, the expense of depreciation is only for that year. So after that year, basically this account starts over again and we start from zero, where the accumulated depreciation account never starts from zero. Each year it's always a running total, a running balance of the total amount of depreciation that you have. Now it starts from zero here, of course, because we have no transactions, but it doesn't zero out each year, so we don't start from scratch. Accumulated depreciation holds the total amount of depreciation. So today we're going to go over both of these accounts, and I think I'll break it up into two parts. So we need to add an account here. We need to mess with this accumulated depreciation account a little bit, because we've added two different accounts here. We've got commercial buildings, and then we've got residential buildings. We could track our depreciation for both of these accounts with one accumulated depreciation account. I don't recommend doing that. And the reason is because when you look at a balance sheet, you won't be able to know how much depreciation is coded, or how much depreciation is specific to each different type of your building. Remember, the whole point of dividing these commercial and residential was we could get a more detailed picture when we looked at a balance sheet of exactly our portfolio. So you'll see later on this will make sense, but when you have a balance sheet, the first thing you're gonna have is your assets, and then right after your fixed assets, like commercial buildings, you're gonna have your accumulated depreciation, and the net of those two accounts, commercial buildings and accumulated depreciation, just say, is your book value, or the value of your assets on your books. So it's very important to have, I think, depreciation match up with your fixed asset accounts. So let's do that right now, and I'll show you what I mean. So I'm going to go Control New, or Control N for New, and then I'm going to go down here to Fixed Assets, and all I do is down arrow and spacebar to highlight, so I don't have to leave the keyboard. Control Enter moves me to the next screen. The account name, I'm going to name it similarly to my building account, so I'm going to say Commercial Depreciation. And now I'm going to hit Tab, and I'm going to hit Spacebar. I want to make this a sub-account of accumulated depreciation. I want accumulated depreciation to be my holder for all of these other sub-accounts. So that way I can have a total of the amount of depreciation I have, but I also have the breakout by commercial and residential. I'm going to leave description blank as I always do. Don't mess with notes or tax line mapping or opening balance. Control Enter is save and close. And now look at that. You can see that I've got a little indentation here underneath accumulated depreciation, which lets me know that this is a sub-account. I'm going to do the same for residential. Control N, down, 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 spacebar, Control Enter, residential depreciation. Whoop. I hit it. I do not want to select from examples. Tab twice, spacebar, tab, ACC, tab, 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 save and close, enter. Boom. So now I've got accumulated depreciation, and underneath I've got commercial and residential. What you could do, and what I'll do now actually, just to make this kind of neat and match up, is I'll Control Enter. I'm going to go down twice, spacebar, Control Enter, and then I'm going to say I'm going to create an account called Buildings. I'm going to Control Enter, save and close. I'm going to go to Commercial Buildings, and I'm going to Edit. I'm going to take away Buildings. Spacebar, sub-account, BUI, save and close. I'm going to go to Residential, Control E is Edit, erase Buildings, sub-account, Buildings. Now you can see that I've kind of matched these up. So I've got a Buildings account with commercial and residential as sub-accounts, and then I've got an accumulated depreciation account for commercial and residential depreciation. This is good because when you look at a balance sheet and you want to collapse it down and you want to look at it from a real high level perspective, now you've got these two accounts, you've got buildings and accumulated depreciation that will collapse down into one, and it'll be cleaner when you look at it. I could do the same with land, and I think I will. So I'm going to go Control N, fixed asset, same thing, land, save and close, edit residential land, get rid of land, LAN, Control Enter, commercial land, Control E, erase land, Control, oops, forgot to make that a sub-account, so back to Control E, tab, spacebar, LAN, tab, save and close, boom. So now I've got all my building and land accounts kind of organized in the same way. Depreciation, buildings, land, and they've all got these commercial and residential sub-accounts. Okay, that's it for this video. In the next part, I will do depreciation expense. Thanks for watching.